Righty. All right, we're going to jump right in, and futures gapping up across the board. You have the ES up, the Nasdaq's up almost 100, the Russell's even up. We are getting into some pretty decent levels, though, from what I'm looking at here. I think we have a pretty good resistance band, not just a resistance area, but a resistance band from about 45.52. 45.52 up to about 45.76, so about a 25-point range where we could see some selling come in, and it does appear that there is a strong buy or sell side bias here up on the profile, up to about 58, 45, 85, 25. S3 is probably the most interesting trade on the board today. That would be a pretty big sell-off, though, if we did. I mean, that's almost over, it's really close to 100 points, if indeed it happens. We do have this big gap in here from the contract roll, so that's kind of throwing a lot of things off as well. I always hate when the contracts roll, because it does kind of reap havoc on a lot of the pivots and all that other stuff. So we'll probably have another day or so of trading before that kind of gets filtered out. So still trying to deal with that. But on the other side of it is that R3 I have marked for an alert for a possible short setup here, which is about 45. Looks like it's about 45, 45, 50, 45, 45, 50. I really like that spot, and here's why. If you actually go on the 1 hour, so I'm using the 1 hour, you can see that we do see some delta coming in, and it's really right below this large band of sell side profile that we have on the volume profile. So, it kind of sets up nice there, in my opinion, for a possible trade. It is a bit of a swing high from back on September 23rd. So again, you do have these double candles here. Again, I'm not as I'm not really a big fanatic on like candlesticks and all that other garbage, but you do kind of have a double wick in here where we were able to touch, and we have not been back up there since September 23rd. All right. So there's kind of why I'm looking at R3 as a pretty good spot to take a short. Now, these are not shorts you're going to bequeath to your kids, right? These are scalps. So what you're going to be looking for here is, chances are the setup I'm going to use is pretty standard. I'm probably just going to use like one or two of the big. So if you're using the big boy contract, which is the ES, I probably won't go more than one or two. That's usually all I like to trade with the big boy contract. If you're using the micros, I probably use three. You're doing the MES, you probably use three there. It's a little easier on the margin with those. And with that, I usually use a 12 tick stop. So it's usually a 12 tick stop with the micros, and it's usually an 8 tick stop with the big boy ES. Again, my philosophy is I would rather, and I know I get people who just like, you have no conviction in your setup. No, it's not that I have no conviction in my setup. It's just I've been doing this for over 30 years, and I've seen having conviction in my setup. I've seen it like evaporate my account just because I was too much of a knucklehead to take a trade, take a stop out, reevaluate, and if the trade is still valid, take it again. Do it again, with the same 8 tick stop. And if I get stopped out a second time, then, hey, so be it. But what I've done is I limited my risk on both trades of what I could possibly lose, rather than sit in the one trade and maybe get stopped out once, right? I have another chance to possibly get it at a better price, a little higher, with the potential for it to come back down. So again, that's just how I operate, and I've kind of been conditioned over the years to run my brain that way, because to me, as I said, I will take some trades 2, even 3 times if the setup is right. I would rather take those quick stop outs, get out of the way, because oftentimes I've just gotten run over and used like a 20 tick stop or a 25 tick stop and got forced to sit in a trade too. Like, no one talks about that. Like, there's the time value of being in a trade where you're not actively looking for something else to set up. Let's face it, we're all not Warren Buffett, or, we all don't have a gazillion amounts of dollars. Like, I have a limited amount of money that I have to trade with when it comes to futures, right? I'm only allowed so much margin. These contracts are big, they're like 15 grand a pop. Day trading margin at a brokerage firm is $1,000, but still, you're still having to use that money. So chances are that you're in multiple trades at a time. For most retailers, they're not. We're not. I just don't like to have multiple futures trades on at the same time. I just don't. I just don't want that responsibility, because I'm a simple person. I'm pretty stupid, in fact. And since I'm pretty stupid, I'm single-threaded, and I just rather deal with one thing at a time. So anyway, that's just how I work. I highly recommend it. If you're having problems trading futures and you're watching all these clowns on social media here, trading some of these big contracts with these big... I've seen people trade ES and NASDAQ and many others with these just massive, massive stops. 20, sometimes 30 ticks. You're talking like you're going to get stopped out once and you're going to be done for the day, because you're going to be down 3, 4, sometimes $500. And then just reality is, just realize that 80 to 90% of those jackasses aren't even trading real money. They're using some kind of sim account to demonstrate. Now, not that they may not trade real money underneath the covers, which they probably do. I'm not going to deny that. But for those people that are like demonstrating and all this other shit, I highly, highly doubt it's real money. And the only reason why I know that is they just see how, when they do broadcast, how things get filled. Things do not get filled as cleanly and efficiently as I see people get filled on things. There's slippage all the time. In fact, I would say more than 50% of every trade that I've ever done in a real account is their slippage. Whether it's 2 points, 2 ticks, 3 ticks, there's always slippage on the way in and on the way out. And that's just the way it is. Markets move too fast. So anyway, that's enough about that. So that's kind of how I roll. So usually use an 8 tick stop. And then if it's something like, again, if today's highs are at R3 and it looks like it's kind of drifting up, like we get this drift like we have all morning, I may use even a 6 tick stop. Because especially if it's at the highs, it's at a pretty strong reversal area. Hey, look, if it's going to reverse, it's going to reverse there. And I'm not going to take the chance of it just continuing to drift and just kind of like, take me out and then be forced to sit in this long-ass trade, take a stop out where, you know what, if I get stopped out in 2 minutes, I'd rather get out of the way in 2 minutes than sit in it for an hour. So anyway, there's that long-winded story, but that's really the only spot. As I mentioned, I really like S3 down here. Let's just zoom in a little bit. I really like S3 for a buy. You can see it's right above this band down here of some pretty good buying delta. And that's a big move, right? If we get that, that's a big move, and that would have to be, something would have to happen for us to really get back down to that today. There would have to be some seriously selling. So R3 on the ES seems to be that kind of, to me, probably the best setup of the day. And then not only is the ES setting up for a really nice setup, I believe the Russell at R3 is also setting up for a really, really nice trade. Not even so much more like to be triggered at R3. And hopefully if we do get what I call these drifts, we get a drift up into this band up here. Right? We get caught in this band up here where we get carried a little bit, maybe because of lack of momentum and lack of volume, which would be beautiful. And we kind of drift above R3 and get up in this area about 1870 or so, 1874 to be exact. This to me is like, this is a ripe ass. This is absolutely a really excellent setup on the Russell for a possible short, in my personal opinion, on this one. So I'm actually going to go ahead and mark this one, if I can spell right. And those who are following along, I do have a Discord where I post all these. When I send these alerts out, they do go into the Discord as an alert, and it actually triggers and says what it is. And this I'm actually calling a high volume node on the 1 hour. I always try to disclaim when and what date. And happy, well, not even happy, but sadly, 9/11. Never forget. So anyway, there is that setup, and to me, that is probably, my personal opinion, this is the trade of the day if it sets up. This is absolutely the trade of the day. It's a little interesting here. I'm going to have to go look at order flow on the Russell, but just very interesting here that just back out. Very interesting here that we're actually really not been able to get past this R2 all day. Got this P pattern kind of forming overnight up here with about equal buy side as sell side. So it is kind of a little bit of a battle going on here. I would keep an eye on this level. If we do kind of get a little bit of lack of momentum here, this could potentially be a very quick hit. I'm not going to call this it's really not a high, it's not as high probability as the other one, but this one is, I think, a pretty good one if you're looking for a quick trade. Now, with something like this, I would do like, on the Russell, I would do like 10 ticks on this, 10 tick stop. Look to make 10 or 20 ticks. Again, this is going to be a quick hitter. You're going to be looking for this to maybe kind of get up to about R2 and then kind of fade back down, take your money and run, because you may actually get caught in just like a retrace and then some further continuation to the upside. God, I haven't been doing this long, and I actually sound like I know what the fuck I'm talking about. Isn't it scary? But I enjoy doing this stuff. I really do. Always did. But other things kind of had happening outside of this in the real world for me. Nothing drastic. It's really more my real job, which I love my real job. So I would never get rid of my real job. I have absolutely an awesome, awesome real job. Fortunate for me that I'm able to do both. And for some reason that didn't like, I don't think that liked my code, or did. Okay, it did. So anyway, R2 on the Russell is yet another one here on for some setups. Today, I don't know if I really want to get long on the Russell. If the Russell gets weak, and what's interesting here is I'm actually going to just do the 4 hour on this and then reset this and zoom in. If the Russell kind of sells off here, I'm not so sure. I'm not so sure it's really going to have, there's a lot of buying in here. The thing that troubles me the most is this huge, huge volume hole in here. What I mean by volume hole is this area right in here, right in there, right? You can see literally we have, selling delta, delta to the downside for selling. We have a pretty nice band of green buyers, but then they kind of like vanish. They become sellers, not that many really, and then it doesn't really There's no real strong buying until about 1800. And so, and then you have a pretty significant head and shoulders pattern here on the Russell. I don't know if anybody's noticed that. Again, I'm not one of these pattern people that just like, I point them out when I see them, but you got the shoulder, you got your neckline here, you got this whole business, right? You got your head here. And it is definitely a classic head and shoulders on the 4 hour. And I always tend to like, hey, try and use these things as like an indicator, right? Head and shoulders is generally bearish. So more than likely, you got to watch out for the trade to be to the bearish side. That's all. That's it. It's not, anything. I'm not going to make any more of a big deal than that. And now I can clear all these. Let me just clear all this off. And so that's kind of what's going on in the Russell. So I don't know if I'd be willing to take. I have an alert set down here at the bottom of this neckline at about 1834. I don't know if I would really have the cojones to take that trade down there, especially if we get some downside momentum. That's pretty hard. I think we just blow through there like it doesn't even exist. And again, we get a complete retrace back down to 1800. And I would say this, I would be willing to get in down there. That is, to me, a very interesting spot down in this area here. Just between these two sell bands. Apple Qualcomm. Big frickin' deal. Who cares? Yeah, it helped Qualcomm, but who cares? Of course they were going to renew it. But anyway, I see a really big a support area down here at about 1800. And it's also got the other thing going for it. It's the BRN, that big round number. All right, so that's kind of the story on it. And me, I don't trade the NASDAQ futures as much. I think they're a little too whippy. I don't really like the thing I don't like the most about the NASDAQ is I don't like the margin requirements. The margin requirements are pretty stiff for what I would believe to be. It's supposed to be the people's index, right? And wasn't that the whole thing about it? That was supposed to be the new wave. And I don't know, I find the ES is just much more forgiving to trade than the NASDAQ. NASDAQ, when you're wrong on the NASDAQ, you're wrong and you know it quick. And a lot of times, most of the time, I'm wrong on the NASDAQ, so I don't usually trade it. So that's kind of what's going on there. So I'm not even going to talk about it. And then last, but certainly not least, well, actually not last, second to last, is soybeans. Soybeans, and this goes for grains in general. I'm kind of surprised that it really hasn't been as big of an upside push on soybeans here, especially with the weather the way it's been. There's been, reports of drought. I know just watching some of the crop reports, the yields are down, which means for what they've planted based on what they're actually yielding is down pretty significantly from year over year. And then we really haven't gotten into, right now we're into completely big time harvest time. So, and the yields are not showing to be there. And so I don't really know what the deal is. I mean, other people are telling me, or not other people, but things I'm seeing and reading is you have Brazil, who seems to be kind of increasing their amount of exports of soybeans, hurting supply here domestically. So there's maybe some other things going on, but as far as trading and trading soybeans and where they are, I really like where this is here, because I think it's got a lot of support above this 1360 level. You can see it's all green here. We've had some rough goes of it. And if you look at it, it's been stuck in a box. And it's only a matter of time, and we're in that time of year where something's got to give. Something's got to give. It's either gonna bust and break out of here, or it's gonna blow up and break down. I mean, it is literally at that point, and it is smack dab in the middle of its range. So, so if I'm looking for trades on soybeans, I'm looking for anything above 14.29. We really need to break out over this and make this. We need to make this support, or we need to break down. I mean, I just don't see anything else happening. I'm watching soybeans. It's usually the time of year that I usually watch soybeans and trade soybeans because there's usually a lot of volume in them, and they usually trade pretty forgivingly, meaning that they abide by a lot of technical things. So they are good from that perspective to trade, and that's why I'm even bringing them up. As far as corn and wheat, no, they look worse. Like you look at these both, they look. I mean, if anything, you almost have to go long these commodities because, look, they just gotten the snot beat out of them. Gotten the absolute snot beat out of them, and there's really, what are you going to do? You're just going to continue to pile on here short. At some point, you're going to get a bounce. I don't know when. They just don't move fast enough for me. I think your best bet is to stick with soybeans. And anyway, that's just my take on things. And that's pretty much it as far as commodities. I will throw crude up. I think crude's going to $100. I think that's where they want it to be. I think that's just a significant number. It's always been a significant number over the years. Anytime you hear about production cuts and all this other business coming out, it usually means they want it to be around. They usually want it to go to $100, and then $100 usually kind of signals a lot of different things. So I have a couple things marked here. I'm looking at 91.92 on crude. 91.92. This is light sweet. 91.92 I think is a good area there. There's actually a high volume node there on the profile. It's not any kind of pivot point, but I've had that marked for quite a while now and kind of waiting on that. And they also have a little bit of a double top or an M pattern back from October. Right there it is, the M. All right, let's get into that Elliott wave garbage. But anyway, we do have, what appears to be a good band of selling, right? This is all red over here. Look at the profile. Let me expand it, right? All red out here. All red. I mean, so pretty much after 91.88, the sellers kind of, the buyers kind of just go to bed at that point, and they're just not around. And it's nothing but red up and above here, so that's why I have that mark. So you kind of have two spots. 91.97 is going to be the trigger, and then really the ultimate spot is going to be just below this 93.76, or even just a pop above 93.76 for a possible short. Now, I'm not trading crude like I used to on a regular basis, but I still am looking for places to get in. And with this move in crude, it's one of those things that, again, what are you going to do? Just get long and just sit there and pray and wait? You kind of have to get short here as this thing gets, and you can see shorting these rips off these swing highs have actually paid off really well. And so anyway, so looking at that in the crude oil, and it's another one I have marked in the other. Last but certainly not least. Now we're getting to the last, but certainly not least. And this one's more of just a, look, this is a pure contrarian trade through and through, because if you really start focusing in and drilling down in here, bonds look like they are if they haven't bottomed or they're not near the bottom here. I mean, we have touch here, so you have pretty much a classic double bottom within the last year, right, on a 4-hour chart. So you do have a pretty classic double bottom, and we haven't really been able to get any mojo. We got a couple of, moves after that second touchdown here and some rallies back up, but they have not really been sustainable. And if you look at the profile, it's really not telling you much of anything, because it's a market in disarray. Because face it, let's just put it in reality. The thing that's driving these markets is the Federal Reserve right now. That's it. That's who's driving these markets. And so they're at the whim of the Fed. And then anyway, so when I say wing and a prayer, what are you going to do? Go short bonds here when it's really at the lows over the last, year and a half? Probably even closer than that. So, I mean, again, just pure contrarian play. So the way I'm doing this is I'm actually trading the TLT. And, I'm not doing anything crazy. There's no volatility, so you can't sell shit. So don't look to sell anything in here. But I'm just going old school, just spreads. And just buying some call spreads. And I'm going out. I'm going out to December. I got a couple Decembers, and I'm going right out of them. I'm not going completely out of the money, way, way far. But I am going a little out of the money, and I'm doing stuff like like a 95, 96. Or if I want to increase the risk, I'm just maybe doing a $2 wide. In some cases, I got a couple of $3 wides. So I'm kind of taking these dink and dunkers here on the call side is simply as just a contrarian play. And I'm going out to December. I'm giving myself some time to be right. Now, I know they're not very high probability trades, and you're probably saying, well, why don't you sell? I would love to sell puts, but I'm not going to sell puts with an IB rank of 13. It's stupid. I'm just not. Because if we get a volatility expansion in here for whatever reason and the price doesn't go anywhere and I'm short puts, I'm going to get fucked, right? So screw that. So that's kind of where you're at. And so with volatility being where it is in the TLT, this is an ETF based on the 30-year. I'm just going to get long the old-fashioned way and just do spreads. And you can even go one further, and I have one on now. I went out and did the January leap. I did the January 100 leap. I just bought the call outright. I didn't even do a spread. I think I got a little bit better price. I think I got 175 or something but needless to say, again, I'm just getting synthetically long. I'm not piling in. I'm just gradually stepping in because I don't think it's going to take an enormous amount of economic data, or I should say any additional economic data that's not very strong to give the Fed the impression that, hey, we need to stop raising interest rates. Because they keep talking about it's not choking off loan demand. I think what the numbers and again, this is my opinion, I think the numbers that are being reported, there's a 6-month lag on those numbers because people that I talk to in sales that deal with things with interest rates have said that literally in the last 3 to 6 months, the last 3 months specifically, things are god awful. I mean, literally quoting, I haven't seen things like this or as slow as this since 2008, 2009. More so 2009, 2010, when the height of the financial crisis was a thing. So anyway, take that for whatever it's worth. All the economic numbers that have been coming out indicate that a slowdown is on the way. So anyway, that's really all it is. And then just this TLT or this bond long trade is, again, just a contrarian play here because, look, it'd probably be easy to get short bonds here. And where's it going to go? Could they probably keep falling? Yeah, I absolutely could. But at this stage of the game, to me, it's kind of the risk is to the downside. And I've been saying that all year, but hey, it is what it is. So that's kind of where I'm at as far as that's concerned. Now, as far as stocks and stuff like that, I have not really been doing much of anything. And the reason is there is no volatility, folks. There is no volatility to be found. And, that's kind of my gig. And anybody who's been following me long enough, that is my gig is volatility. And it sucks. And, if I go through earnings, I think Oracle reported this. I think they report this week. Maybe I'll take a look at them. They already reported. They were before the bell. I just can't look at any of these earnings here. Even Adobe, like pretty decent IB rank. The liquidity in a lot of these stocks that are reporting up and coming, they're all shit, right? They all suck as far as liquidity and that sort of thing. So that's why looking at these, like even AutoZone, all right, as interesting as that is, 44 IB rank, it's a $2,500 stock. What the fuck am I going to do there? I'm not going to do anything in there. And neither is anybody else. Look at the open interest. There's nobody doing anything in there. Who wants to own this when there's open interest of 11, right? There's no liquidity in it. Nobody's trading that. It's too high priced. They almost need a split. General Mills looks interesting, but that's a couple weeks away, 9/20. So there's no real other ones. You got FedEx, again, 9/20. That's coming down the road. So these are kind of way beyond. So there's no real volatility there. And then we actually look for volatility plays, which we use liquidity. We use these high option volume, and we rank by IBR. And it's all garbage on here. It's all garbage. They're all garbage stocks. And it's all the same garbage that I used to see before we actually had the sell-off back earlier in the year. The same garbage stocks are up on the volatility scale here, which is pretty funny. I think it's hilarious. And so I just don't think there's much to do. And then not only are they garbage, if they're not garbage, there's stuff that's not liquid, like an Adobe. Like Adobe's just not a very liquid stock. And when I look up and down, and here's the volume, here's the option chain in October, and my gig, I always look for open interest. Like to me, I want to see who else is actually doing stuff in here. I don't like to be alone. And when I see numbers in the hundreds, especially on a stock that's $500, I just tend to stay away. FedEx, I didn't really take a look at, but again, FedEx has earnings in a couple of weeks, so I'm not really looking. This one's relatively liquid. It's not great, but it's relatively liquid. We got WBA, Walgreens, another one. It looks good on paper, but what are you doing in here? You're just selling puts in here. And again, IB rank at 32 is nothing to shake a stick at. And then you start getting in here and like looking at these volatility numbers at 20, 19. One thing I don't want to get myself caught up in, and it's happened to me once too many times, not going to happen to me anymore, is that I get caught in this, and I'll call them out for what they are, these tasty trade type trades where you're selling premium and all this other crap, and then you get a volatility spike and you're in all these stocks that have like no volatility, and then volatility spikes and it doubles and you're short all this premium, and guess what happens? You get fucked bad, so bad, and it's something they just never talk about. If I were actually to beat those guys up on something, they never talk about that. Never. They never talk about that. That look, if you're not selling stuff that's near the 40s and 50s or some type of historically high volatility in the stock, stay away. Don't do, buy options or don't do options at all. And that's kind of where I'm at right now with options. And I'm not no genius. Like, I'm not saying I'm smarter than them. No, I'm not. I actually watch the program every day. I'm just saying, just be careful with these volatility plays when, you're looking to sell premium and there's nothing to sell here. You're not getting paid for doing anything in here, and it's not worth the risk, because if you do get that little bit of volatility spike, you will see the premium on your options just explode. And then guess what? Especially if you're doing it on margin, what happens? Your margin increases, right? The demand, they might change your margin requirements, and then you're screwed. All right. So there's just nothing to be had. And so it's thin pickings. And that's why I've actually reverted back to starting to trade some futures, because that seems to be where the action is. And if you're only going to be trading stocks, the thing that's actually worked for me the best is if I want to get long something, I've been sticking to the big tech. If I want to get long, I'll get long the stock, just buy the stock. And if I want to get short, I've just been shorting it. And that's what's been working. And it's just outright doing the stocks instead of dicking around with the options because, again, there's just not enough volatility in here for me to play around with. And with that being said, I'm going to wrap it up. And I think I finished up pretty early. Let's see, 35 minutes? Yeah, not bad. So that's really it. That's all I got on the table. A bunch of trades called out on the ES, on the Russell, a couple on crude oil. We looked at bonds and talked about doing some bond trades in the TLT, and also looked at the soybeans as well. So there you have it. Yes, I did not disappear. There's another one for the record books. And today, a Monday, September 11th, never forget. And don't you ever forget. And don't ever let them tell you to forget. And don't ever forget what they put everybody through just a little while ago. Okay, have a good one. And